Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 12th of May. Hope you're all doing well, and please don't forget to like, subscribe, and share the content with your fellow trading colleagues if you find the content that I provide useful every week. So, getting into the week ahead, and the market attention will continue on US trade negotiations, followed by key data, including the inflation rate, retail sales, and speeches from Federal Reserve officials, notably Chair Powell. Investors will also closely monitor producer prices, industrial production, Michigan consumer sentiment, export and import prices. In the UK, key releases include Q1 GDP growth, jobless rate, goods, trade balance, and industrial production. China is set to report industrial production. Germany will publish ZEW sentiment, economic sentiment index. Australia report unemployment figures. Q1 GDP growth rate is expected from Japan, while foreign trade data will be in the spotlight for the euro area. So, lots going on this week. Starting off on the VIX volatility index, and really just understanding from a risk on, risk off perspective where money is flowing into and out of in a risk off environment. Investors pretty much are concerned about safe haven plays and protecting what they've got. So they flow in, money will flow into safe haven assets like gold, or safe haven currencies like the Swiss franc and the Japanese yen. And in the more risk on environment, then you have investors which will, or investors will be more concerned about a return and getting a yield on their investments, and they will go into higher yielding assets and commodities. So at the moment, just looking at the VIX, we are heading lower and heading more towards the risk on side of things. And really, it's because we have several deals being potentially being done. One was the UK US, and we'll get into that a bit later. But also, as well, this weekend, the US China Open trade talks in bid to wind down their tariff war. So, high stakes talk between US and China are taking place in Switzerland to de escalate their trade war, with US Treasury Secretary Scott Bessent and Chinese Vice Premier He Lafeng, I think that's how you pronounce it, leading the negotiations. And so the talks aim to lower tensions and potentially reach a deal, but both sides have sought to project confidence and set expectations low, with the US seeking concessions from China and China viewing the talks as exploratory rather than likely to yield an immediate grand bargain. So it's just the preliminary talks, really, but ultimately, the fact that they're coming to the table and trying to do at least speak to each other, that is seen as more risk on it and a de-escalation in trade tariffs. Therefore, we can really now look towards things like interest rate differential starting to take more of a front seat, I think, if those deals do get done and we continue to de-escalate when it comes to risk on and risk off sentiment. So, looking at the US dollar index, and the US dollar index at the moment, dollar will be probably likely to benefit from any kind of risk on sentiment. So any deals that are being done or potentially being done, that's seen as a positive for the US, but also as well. From a fundamental perspective, in terms of interest rates, Powell says Fed won't be rushed. Outlook depends on White House. So the main key takeaways are that the Federal Open Market Committee held interest rates steady and said the risks of seeing higher inflation and unemployment have risen due to uncertainty over trade policy and tariffs. Powell suggests that the Fed will wait for conviction on whether the next move is a cut based on the economy moving towards a recession, or whether it's a move towards more restrictive policy due to high inflation becoming entrenched in the economy. So the Fed are actually a bit well considered to be actually a bit hawkish in their FOMC statement on Wednesday. Basically, they're holding for longer. They're not looking to cut for now. So I think there was some rumors that they could potentially look to cut on in June at June's meeting, but that's now been pushed back to maybe July. And so no cuts really in June, or cuts in June are seen as more unlikely. So that's seen as being supportive for the US. And so the with both the Fed being a bit hawkish, deals being potentially done with China, I think in the short term, the US should maybe want to rally a little bit. But overall, I think over the medium to long term, when the Fed do start to cut rates, because rate cuts are still being priced into the market a bit later on in the year, around maybe July, potentially September, that's where I think you'll start to get the dollar start to depreciate and devalue again. But again, this analysis is really kind of based on more of a de-escalation in tariffs. If Monday comes along and the deals aren't done, or the meetings didn't go well, then I think more risk off will probably hurt the dollar, although historically it has been more of a risk off currency. I think it could hurt the dollar and we could see the dollar start to sell off. So, still uncertain times, but if we do get positive deals, or at least positive outcome out of the China deal, we could see some more dollar appreciation in the short term. So I do think the dollar could be a short term buy on pullbacks into some sort of demand zone, or if prices basically moved higher and then created a higher low, then you're looking for a pullback into that zone there before looking at going long. But again, it all depends upon what happens with the tariff negotiations. Looking at the dollar yen and the dollar yen, again, pretty much all markets are going to be dependent upon what happens with the yen, at the moment, I think in the short term, from a risk off perspective, you would think that the yen would appreciate. I think the yen is going to be a victim of the risk on sentiment, if we do get risk on sentiment. And when I say that, I mean we're likely to devalue in the short term for the yen. From a fundamental perspective, I think the yen is definitely more of a buy, as the Bank of Japan are really the only bank that are looking to hike rates, right? So they're looking to appreciate their currency because inflation is above their 2% target. But from a sentiment perspective, if we do get more risk on, then we will look. I say we will, but prices are likely to continue to weaken for the yen. Also, as well, at the same time, we have yen long positioning from CFT CCOT report perspective, gives scope for renewed depreciation. So what we've seen over the past few weeks, month or two, is that institutions are going long. And when you get crowded long positions, what typically tends to happen is that you get profit taking going on, right? And so if institutions are starting to take profit, it doesn't mean that they're short, but it just means that we could see a little bit more of a pullback on that yen. And so it makes sense, right, for the yen to maybe reach somewhere around these highs, maybe the 147s, 148s. But I think once it starts to get, or if it does start to get up to these highs, I think that's start to where we may want to see some short trades. But let's see what happens there. If you are looking for a long trade, then you are looking for a pullback into a demand zone right here. So that's where demand is. And you're looking for at least some sort of pullback if you're looking at buying dollar risk on sentiment. Dollar Swiss. Dollar Swiss, I think, should really be a continued long and a risk on environment. Any pullbacks into a demand zone should be decent for a long trade. The Swiss franc and the Swiss National Bank consider the Swiss franc to be actually on the expensive side, and they're actually looking for the Swiss to weaken, meaning that they want more upside potential, right? They want the Swiss franc to devalue, therefore going higher on the dollar Swiss. So any pullbacks, if you are looking to buy the dollar in a risk on environment, I think the dollar Swiss is probably the number one candidate when it comes to pairs and pair selections. So that's where I am with the dollar Swiss. Looking at the dollar CAD has pulled back quite a bit. I think overall, though, this pair a little bit difficult to trade simply because in the risk on environment or less risk off, you would think that the Canadian dollar would also do quite well. So when you've got two currencies that could potentially do well in the risk on environment, it's a trickier trade. But if you are looking at going short, buying the Canadian dollar against the US dollar, I think now is probably the time. Or if you're looking for a pullback and buying the US dollar against the Canadian dollar, a pullback into this demand zone, the 138s to 137.50s, would really be seen as the better buying area. Looking at the pound dollar and the pound, I spoke about this a little bit earlier, but there was obviously some optimism. Where are we now? Sorry, one second. Here it is. The Trump's first trade pact offered faint glimpse on art of the deal. So this was basically the framework deal with between the UK and the US. So it says the framework, which includes a reduction in tariffs on UK cars and metals, may not be a template for other countries such as Japan or the European Union due to the unique circumstances of the US UK trade relationship. So there are the details that have yet to be worked out, and it says here the US UK trade framework announced in the Oval Office shows that President Trump is willing to make progress on trade deals even without a final accord, and that American levies can be negotiated down. So that is positive for sentiment. If the UK are able to do some sort of deal or the beginnings of a deal, some sort of initial deal, then other countries will likely come to the table. So that now becomes supportive for the pound, whereas other countries who are, still waiting to do a deal, there's uncertainty there, and so they may be lagging behind in terms of investment in from investment in their economies, right? Like the euro, but we'll get into that a little bit later. But also as well, the Bank of England, the headline is that the pound sterling rises against euro and dollar as Bank of England hawks hold the line. So a follow up on June interest rate cuts is no longer a sure bet. So the British pound rallied against the euro and the dollar and other currencies after the Bank of England cut interest rates by 25 basis points and reaffirmed its commitment to a cautious stance when considering future interest rate cuts. And that is really the key. A lot of traders will just assume that rate cuts will automatically equal a weaker currency or a more devalued currency, but it's really about future policy and what the central bank is likely to do with interest rate cuts. If they're going to be cutting more, they're going to be cutting less, whether they're hawkish or dovish. And this is what's known as more of a hawkish cut. So it says here the bank reaffirmed that due to the medium term outlook for inflation, a gradual and careful approach to the further withdrawal of monetary policy restraint remains appropriate. So, they're looking at being very cautious on cuts. So, less cuts than probably was what was expected before the Bank of England meeting. So, that becomes again a bit more of a hawkish stance. And it says here the decision and guidance were more hawkish than expected, meaning the bank has opted to maintain a higher for longer interest rate profile. The de facto FX reaction to such hawkish surprises is a strengthening of the pound, and that would be the same thing for most currencies, right? And it's the same thing for example, going back to the dollar. You know, uh, Chair Fed Chair Powell is saying that he's looking to hold for longer than what the market was expecting. Therefore, from an interest rate perspective, that should support the dollar. So the pound is in the same boat, right? So from a deals perspective, from a tariff perspective and a monetary policy perspective, we're seeing the dollar being supported now. The pound dollar isn't necessarily the best uh pair to kind of trade to express dollar strength, because you've got, I think at the moment, I think two strong currencies, or the dollar should be at least on a stronger side, again depending on what happens with risk sentiment. But if we head more towards the risk on side of things, then I think this currency pair is going to find it difficult to find any kind of trending direction, whereas something like the pound versus the New Zealand dollar, something like the pound Swiss, would be more of a better trade, right? But also as well, I go into a lot more detail about the pairs that I'm interested in, as well as in-depth fundamental analysis. If you're a member of the Discord group, then what you want to do when you are in the Discord group is go to the trading videos channel right here, and then click on that, click on the link in there, and enter into the password, and then you will get into the members area, trading videos channel, where I go into the weekly fundamentals and technicals members video, which is an hour and 28 minutes, as well as accessing all of the previous weeks and months and years videos, all in the members area. By the way, there's years of videos in here also as well. Just as a quick reminder, if you do want to search for anything, let's say for example, tariffs, right? You want to know about tariffs, comes up with all the videos where I talk about tariffs from a historical level. I say historical, but past meetings, group meetings, live group calls, and videos that I've made talking about tariffs and the impacts. So yeah, basically you can do that if you are a member. Now, heading back to the charts. And so, yeah, the pound really, in my eyes, should be more of a buy than a sell, but just not against the dollar. Looking at the pound yen, and the pound yen could be one of those short term plays in terms of buying the pound against the yen. Again, in a risk on environment, I would expect the yen to weaken, but I think the yen weakening would be more short term. I think the sentiment would drive, of course, money into higher yielding assets like or currencies like the pound. But I think overall, I think once the dust settles, I think that the yen should be again a buy if the Bank of Japan become a little bit more hawkish. So in the short term, I think any pullbacks into demand zones around here should be at least a buying opportunity. But again, it really does depend upon when prices do come down here, what the risk sentiment is saying. But either or, not really a pair that I'm interested in. If I'm looking to buy the pound, it's going to be against a weaker currency, I think fundamentally like the Swiss franc. But those are your options. Or if you're looking for a short trade now, I think a move back up into this zone should be decent before looking for a sell trade. If you're looking for some supporting evidence, you've got a level of support and resistance right there, but also as well, you've got some market highs right around here. So those would be the two levels you're looking to look for short trades. If you're looking, if you think that the yen is value and the pound is on the expensive side. Looking at the euro equally weighted index, and like the dollar index, is a measure of the euro strength against all of the other currencies that we trade. Now, I've slightly changed my bias on the euro. I don't think it's an all-out sell, but I think over the next month or so, in the short term, I do think that the euro actually can be a bit more of a sell. I think it's coming off the boil a bit, and there's reasons for it. One of the main reasons really for the for euro potential weakness is the fact that you're now seeing some dollar strength, right? So if the dollar, you know, or potential dollar strength would mean that euro would weaken because they kind of are inversely correlated. But also, as well, from a monetary policy perspective, you have options betting on the ECB rate cut by September rise in popularity. And so it says here traders are increasing bets on the European Central Bank's interest rate decision in September, with trading volumes on options targeting a rate reduction in September, surpassing activity on contracts aimed at next month's decisions. You've got bets on ECB interest rate cuts have grown over the past month due to concerns surrounding the region's economic growth, weaker business surveys, and a strong euro, with money markets implying 67 basis points of further rate reductions this year, and outstanding positions in September call options, which target lower interest rates, rose above 1.5 million contracts last week and are 30% higher than the equivalent positions expiring in December. So ultimately, the options traders are quite bearish on the euro in terms of interest rate cuts, right? Because interest rate cuts are a tool for the central bank to try to devalue the currency. You also have the ECB's rain favors a rate cut in June, if justified by forecasts, is the headline. And also, as well, you've got ECB Simca says more cuts needed as UF tariffs weigh on growth. So, from a monetary policy perspective, you've got the Fed who've come out and actually are obviously a bit more hawkish. They're looking to hold rates, whereas the ECB still there's the potential for them to cut rates. But on top of that, you've got a situation where um, the tariff deals Europe and the US have yet to really come to the table. I think they're meeting in July, or is it June? I think it might be June. Matter of fact, I think it's June 9th or July 9th. But we're in May 10th, so we're basically about a month away from their or month or two away from their meeting, which means that there's still more uncertainty around the trade deals that may happen, unlike, for example, the UK, who have obviously established an initial trade I guess a preliminary trade deal, right? And they've got a lot more certainty around their economy, right? Whereas Europe at the moment are still uncertain, and so I think that in the short term may weigh on the euro, right? Weigh on the euro. So I think any pullbacks, right, could be shorting opportunities for the euro. But I think from a medium to long term perspective, come the second half of the year, from maybe around about July, August, maybe into September, when the Fed, really start to cutting rates again, depending of course on the data. But if they do start to cut rates again, then I think the euro may be the beneficiary of that. So I think we could see more further downside on the euro, however it gets there, whether it's like this, or whether it pulls back and then goes to the downside over the next maybe month or two. And then if we do get maybe some more buying or some dollars selling off, and then the euro could start to look to appreciate towards maybe the second half of the year. But so in the short term, I think there are reasons to continue buying the euro. I'm not saying that the euro is a sell against all currencies, not at all. I'm in a Euro New Zealand trade, which I'll talk about, at the end of the video when I do my trade updates. The euro is still, I think, a buy against something like the even the Swiss franc to a certain degree in a risk on environment. But against the US dollar at the moment, I'm not so sure. I'd probably more towards going short on the euro dollar. So looking at the euro dollar here, we have broken through this demand zone. This could be a bit of a stop hunt, but I don't know whether it will be a stop hunt. I think if anything, if there's pullbacks into this zone here, right, I think we could even head down towards the 110s, even 109.50s potentially. right? Who knows? But the path of least resistance, I think at the moment should be to the downside. Any pullbacks to maybe toward maybe the 114s on 1450s, as long as when it comes back here, the US, there's risk on sentiment, there's deals being done. I think, in fact, and Powell obviously remains a bit more hawkish in their holding rates. I think, in fact, the dollar has the potential to pull back a bit, right? But again, I'm not, super bullish or super on the dollar, or super bearish on the euro. I just think that there's at the moment a bit of divergence and an opportunity for some potential short trades around here. Looking at the euro yen, again, I'm potentially interested in a risk on environment. Um, it seems a bit counterintuitive to say that you want to be a buyer of the yen versus the euro in a risk on environment, but keep in mind that the Bank of Japan are looking to hike rates and the European Union are looking to cut rates, right? And so that hopefully should support the yen when we're talking about directional travel, right? Or at least cap the upside when it comes to euro strength against the yen. And so I think any pullbacks on this currency pair actually are decent shorting opportunities to get involved in. And in fact, I think even just above that 165 area may be looking like a nice little stop hunt to get to look for short trades. So that's really where I am at the moment with the euro yen. Euro pound, I've switched my bias again with the euro pound to go short. I thought the euro over the past couple of weeks would have a bit of an advantage, but again, just looking at the trade deal being done, the hawkish Bank of England, I would now assume that this should be really more on the short side, right? You would have more shorts, um, short bias on the euro pound. So let's see what happens here. Of course, we could get a pullback at this area of support and resistance, but the pullback, I think, should be shorted because again, nobody knows whether price are going to react from here. Fundamentals and risk sentiment. There's no technical analysis level that's going to stand in a way of a level of support and resistance. If the market doesn't think that this is going to be a bargain for the euro, then it will just basically it won't respect it, right? So but if it does respect it, doesn't mean that you should really want to be a buyer because it's a low probability trade. The higher probability trade would be to look for a short trade um on this, which is basically what I'm looking for. The Aussie dollar, again, bit of a tricky one because, again, in a risk on environment, you would have expected the Australian dollar to definitely outperform the US dollar. But I think at the moment, both are likely to benefit from a risk on or a de escalation in tariffs. And so, again, directional wise, it's really kind of hard to tell. So I'm staying out of this. But if you do want to be a buyer of the Australian dollar, then you're looking at buys right now. If you're looking for sells, then you're looking for a sell probably just above or around that 65 cent area. Not really much to kind of go on the Aussie dollar and gold. Any kind of dollar strength and a de-escalation will likely cause gold, some gold profit taking, and we could see actually gold start to go a bit lower. Who knows how much lower, but ultimately, um, I think that gold is always an investment buy, a trading buy at the moment. Again, a little bit on the difficult side, but from a fundamental perspective, I think if the dollar does start to rally, risk on starts to come into the market, then in fact we are looking at maybe a bit more of a pullback on gold. So maybe down to these 3245 to 3200 area, and we could enter into what is known as an auction, a ranging sideways moving market where the market agrees that cheap might be the 3,200 area to 3,480 area, right? So that's really where we are with gold. So getting to the trade updates, and so entered into a couple of trades, some profitable trades. The euro CAD, fundamentally I wanted to be a buyer of the euro. I thought this was basically, this is like an update from last week's video. So if you want to watch why I entered into last week's trade, then you can watch that. But as an update, pretty much ended up getting one of my trades in profit. So when prices pulled back, so my entry was here, I entered into one position there, entered into a 50% pullback right here, pending order. And then when we had prices move to the upside, took profit on a one-to-one right there, which was quite nice. And then I'm now looking at trailing stop. So I think I've trailed my stop behind. I think I've moved it up to around, I can't remember off the top of the head, but I think I moved it up to somewhere around here. So now this becomes a small profitable trade. Hopefully, the euro does appreciate against the Canadian dollar, but let's see what happens with that. But so far so good. The euro CAD profitable. Swiss yen, so managed to get into the Swiss yen trade short out of the two. Fundamentally, I think the yen should have way more of an edge. The Swiss National Bank consider the Swiss franc to be very expensive and are looking at potentially cutting rates to zero, whereas the Bank of Japan are doing the opposite, right? And so managed to only get in one position, unfortunately, but that one position was profitable. End up taking profits down here, full profits, and then I was waiting for a pullback to get involved in this, which has happened, but I haven't quite seen my entry. And I think if it does start to pull back a bit more around this area here, that's really where I want to look to get involved. And even if there's a stop hunt, I will get involved and hold it for a lot longer this time. But let's see what happens with the Swiss yen. So that was a profitable trade. Um, Gold, I'm sorry, silver, right? So silver, I spoke about this again last week. This was a stop hunt. Prices managed to pull back to that 50% buy pending order right here. So then ended up uh, getting a nice one-to-one on this as well. So when prices moved to the upside, that was nice. And now I'm only in one position. I'm holding silver at the moment, again, trailing my stop up. So I've trailed my stop up to around, I think it's about here, about that area there. So locked in some profits. If prices do pull back, um, then of course I will lose a smaller position. I've won one, lost a small position, so it's still a small win, but it's still profit at the end of the day. So let's see what happens with silver and Euro New Zealand. So this trade, unfortunately, would have been actually profitable, but ended up being stopped out of three positions and then managed to get back in on one. So I'll break this down. So the initial trade was based on a stop hunt within a daily demand zone. I wanted to be a buyer of the euro over the New Zealand dollar. I entered actually right here, or that was the stop hunt. Entry was right there. Let me zoom in a bit. Entry was here with my stop loss. Right, so my entry was there. My stop loss ended up being around the 18.8840 area, and then overnight ended up being stopped out. And I thought that was the original stop hunt. Obviously, it wasn't. So this ended up being the deepest stop hunt. So when I woke up in the morning, it looked like, of course, prices had stop hunted the stop hunt that I thought, and then prices went to the upside. So then I ended up entering into another trade. I think fundamentally this still has some legs, and so now that becomes the new trade, right? Where I've entered right here, and I've got a 50% pending order there, and I've got a 95% buy pending order there. And so you can see prices did go up to the upside, but so far we haven't necessarily reached a one-to-one. One-to-one target would be here, and but I'm expecting maybe a little bit of weakness out of the euro potentially if we pull back, which is actually what I really want. Is definitely a nice pullback so I can get into two positions, and then or within three positions would be fantastic. once it gets into three positions, then I can start to hopefully, um, take some profit off of those and then swing trade the market order right here and hold them, more towards these types of highs and, towards these market highs. But let's see what happens with those trades. But ultimately, lost three, and now I'm back in on hopefully, three trades, but one at the moment a market order. So not too bad this week in terms of trades, and overall profitable. Still got some unrealized profit as well, which I might take off. But yeah, all good this week. So that's it for this week. Hope you found the analysis useful. I wish you all the best for the week, and take care, and I'll see you in the next video.